Hi everyone, this is Professor Nugent. I just want to recap. I had the stock analysis Excel session today using SB Connect, and it was kind of a disaster. I mean, the questions were answered that students had, but it was very inefficient and took a lot longer than it should have for the few questions. Only 4 students participated, but it took almost 50 minutes to answer just a handful of questions. It was very inefficient. But you can view the recording. I have it backed up. So if you want to review that recording, making this recording to be a little bit more efficient, to go through the main questions and the main issues students had. And it was, even though the meeting was inefficient and we had problems with, we had difficulty sharing screens and only one student had a microphone. And I had my camera on. If you want to see what I look like, you can watch the video for that. But some really good content came out of it, so I'm going to share it with everybody in a more efficient manner. One problem we had is that we've discovered that two of the documents I had given for the stock examples of stock paper, the year-over-year trend analysis was different than the industry analysis document. So I'm going to call up this document. Here it is. Let me make this bigger. Okay, one thing I did is I trimmed it up. I took out, there's a couple of accounts here like tax and interest expense and market value of the debt, things that we don't need to look at for this class. So I trimmed those up and I took them out of here. So if you had confusion about what is this tax rate, and I can understand if you're confused, Hoover's doesn't display that. So I took those items out. And I took out one ratio. I think it was the, maybe the times interest earned ratio, or one of the ratios that I think needed one of these elements I took out, and I just kind of pared down the ratios a little bit here for the year over year. Now, keep in mind that this is just an example. You don't have to follow this exactly. I don't want a duplicate of this. You could use, these are just my suggested ratios here I think you should have. You could add many more ratios if you want to, but this is just sort of the baseline, and you just have to make sure you know how to calculate a year-over-year return. And this is sort of like, think of it like a report card. You want to see a company going from C's to B's to A's, and that's a company you want to buy. You want to see an upward progression in the increase of stock price. So here we had 8%, 18%, 22%. That's an upward momentum. That's good. It's not just all about stock price. We want to see an increase in revenues from 13 to 15%, and we want to see an increase in gross profits. Here we have a slight increase. So these are things that we look at, we want to analyze. Now, the other sheet, so this has been cleaned up to take away some confusion that you may have had. I added an additional spreadsheet that's called Ratio Sheet 1. And in this sheet, I actually printed out the ratio formulas for many of the items in the spreadsheet. So here I have the actual formulas that make it maybe a little bit more simpler. Some people I discovered going to Investopedia or different websites that have much more complicated formulas with different terms in them. And one thing, you don't have to calculate the PEG ratio. We could take that right from Yahoo, because it's really difficult to calculate a 5-year growth in earnings. So that's one ratio you don't have to calculate. But I have this sheet to hopefully help with some of the formulas that may have confused you. And then I also updated the stock analysis. Let's see. Fast food spreadsheet industry example. I updated that a bit too. And what I did here was I just cleaned it up a little bit. So the PEG ratio here, you don't have to calculate this, so you can just get from. I'm going to show you in a minute. There were a lot of questions about this technical information down here, so I'm going to show you how to get the technical information here from Yahoo, because there were some questions about that. Everything else here was pretty self-explanatory. One question they had on the sheet is that what if there's no inventory? If the inventory is showing blank for a year, if you have 1 year that's blank, take an average of the other 3 years and just kind of guesstimate what the inventory is. If there's no inventory, at least put 100 in there or something so your numbers can calculate. So if you have that div slash question mark or number sign and your numbers, it may be because you have zeros up in here. and wherever you have zeros, put in 100 just so it can calculate if that's one of your issues. Yeah. And another question was, for your industry page, I only have 4 companies here, but you should have at least 10. You do need to calculate an industry average, which is a simple average, and calculate all the ratios down here. And also for your year over year, I would suggest creating a year over year file for every company, because you really can't know which stock company would be probably the best company to buy as your recommendation, your strongest buy, unless you look at the year over year trends for every company. It's really more in-depth analysis. And once you make a template, this bottom part, you make all formulas here. You can even link that to the other page and have them pop over, so you don't have to calculate them twice. I want to see some, if you have a little bit of Excel skills in here, it's not so hard. If you make a template and then you overlay the data, you clean up the data and you overlay it into your template, everything should calculate automatically. You shouldn't have to keep reinventing the wheel. So yeah, let's look at these. The other big question were these technical indicators. So let's go to Yahoo Finance. Okay, so when you're in Yahoo Finance, one of the questions came up, well, do I need to keep updating the stock price on my industry analysis page? No, whatever day you, when you're putting in your market price, your stock price here, just pick one day and you can put them here. If you want to put a date over here signifying the date that you put this in, just whatever the most current stock price is. You don't have to match the year or the timing, just whatever the current stock price is right now when you start your analysis. You don't have to keep updating it. That was one question. Okay, so here's the average volume for 3 months right here. So you could use that, this average volume of 3 months. You could use that down here as the daily volume in millions. So you just take the average volume for 3 months. Probably the best thing to do. Now if you go to key statistics, this is where you'll find the PEG ratio. So here's the PEG ratio, and again, you're not going to calculate it, just copy this into your spreadsheet for your PEG ratio. And over here on this side, you're going to find beta might be an interesting one to add to your spreadsheet. That's probably a good, oh, it is here, beta, so there's beta. And we want to look at the short interest percentage of float. That's right here, short interest percentage of float. Then we want to find, we talked about the daily volume, 52-week high and low, moving average 100-day, 100-day, 200-day. So over here, the 52-week high and low is here, the beta. Here's a 50-day and 200-day. So they kind of changed this. If you want to change your spreadsheet to make this a 50-day moving average, you could do that. Or if you're looking for the RSI, a lot of people had questions in the RSI, go to interactive charts. And when the interactive chart comes up, you can click on plus indicator, RSI, I already have it set up. And you can also do moving averages, simple moving average. And if you wanted to get that 100-day moving average, you can put in the 100-day moving average. Okay, so now it's going to plot. Here is my moving average. So the 100-day moving average is at 34. So if you wanted to get that, you could always use the chart for the 100-day moving average. You can even add the 200-day moving average. And here's the RSI. So use whatever is the most common, the last number in the RSI chart, which is 53.41. So that's how you would get those numbers. So that's how you get the beta, moving averages, RSI, 52-week high and low. And now you could also, if you find any of these indicators here on the charts that you want to use, you can go ahead and grab that and put that in your analysis if it's going to help you. Remember, if there's some indicator, and there are plenty of indicators in here, or if there's some key statistic that I don't have on my spreadsheet and you want to add, go right ahead, add it. If you know how to analyze it, it's going to be valuable to your analysis of the project, I would say you should add that. Because whatever helps you to write the paper, the more information you have in the spreadsheet, the better. Because I'm just giving you the bare necessities here with these technical indicators and these financial ratios. These are the bare necessities. And one person did ask me a question that was a good question about the 52-week, I'm sorry, the year-over-year analysis, the trend analysis. So here they're asking for the market price, but they're in different years. So how do you get the stock price from long ago, 5 years ago? Well, again, you go to Yahoo and you can click on historical prices. And then you can just click on monthly and go back to, 2010 or whatever your period is. And here are the monthly prices. So just use the close. So if you want to pick, maybe your year end is December. So go find the December year end, and you can get all your different years. Just got to search through the months to get the years that you want to put up here. So you can have it. It's necessary to make all the ratios that use stock price be accurate in a good measure. And you remember that this year-over-year change is also all the way down here. And this is just the bare minimum of financial ratios here. You can add more to these if you want to, or take them away. That's up to you. There was a question about market capitalization. And again, if you go to Yahoo, the summary, market cap, this is market capitalization, 3.6 billion. So you may want to, a lot of these spreadsheets, you may want to truncate and put a note here, let's say in the millions, if it's a very large number. And you can do that. For example, all the McDonald's statistics here are in the millions, and I cut out, or in the thousands. So if you want to truncate your numbers, if the spreadsheet's getting too big, you can do that. You don't have to. It's up to you. Okay, so that was really the big questions from the video. And the big takeaway here was that I cleaned up the year-over-year trend. I took out some of the categories here that didn't match up to the industry page. So I matched it up a little bit better to the industry. I'm not sure if it's a total match now. Let's see. All right. Okay, so just double checking. Okay, so it looks like all the categories here are now an exact match between the trend and let's just check the ratios. Okay, I took net working capital out. You could add that back in if you want to. And here, okay, so here I have the gross operational net. I'd say having the gross and operational profit margin might be a good thing to add over here. That's the only thing that's missing. And also the PEG ratio. So there's a couple categories. You should keep it consistent. If you want to add them, the working capital and the other profit margins and the PEG ratio over here, you certainly can. But I don't really think you need the PEG ratio as a year-over-year analysis here, or the working capital. But it might be interesting to see the gross and operational profit margins. Could be interesting. But that's up to you. What you want to do, that part is up to you. This is my bare minimum template. If you want to expand it and add other ratios or other indicators, feel free. And also remember, just because you're submitting this to me doesn't mean you can't go back and add something. So if you just want to submit the bare necessity just so you have most of it done, that would be great, because you can always go back and enhance it or add things later. If you learn something new and you're trying to enhance your paper and your analysis, you can go back and modify this at a later date. And remember, this is a 0-point assignment. I wanted you to get a head start and get this done now and ask these questions now and get this set up so that when you write the paper, you're ready to write the paper and you don't have to spend 2 days trying to do this. Because there's a lot of work to set up, the industry analysis of the 10 companies and then do a year-over-year analysis for each company is a lot of work. But it's good spreadsheet work. It's good. The repetition is good, and if you have someone who knows spreadsheets that can help you and become more efficient, that's good experience here, because a spreadsheet is just about every job is going to require spreadsheet work. And the only additional thing is that on this assignment, I have gone ahead at a student's request. He wanted me added 2 days to the due date, so I'm moving it up to October 31st, which is a Saturday, to give you 2 extra days if you need them. Please certainly submit it whenever you can, because I'm going to look these over and of course follow up with some feedback once you do submit it. And that's it. So that's my 15-minute video of the wrap-up of today's. Unfortunately, SB Connect is probably not the best solution for trying to convey this knowledge. That's why I wanted to make this video. But SB Connect was pretty valuable for me, getting some feedback from some things that were confusing from students, and they were right. It was confusing, so I went back and updated those examples, and hopefully this makes it a lot clearer. Okay, well, that's it from here. Talk to you soon.